Traders, what's going on? What's up? Finally, a recap. Relentless trader, where have you been? Guys, last week was all about the team house, enjoying the other guys, having fun, hanging out, learning, reviewing, studying. A lot of this stuff was done off camera. Now, with that being said, there are videos that I'm looking forward to doing here on the upcoming weekend to talk about some of the things that I've learned, especially mindset, right? And so stay tuned for that. But today, let's jump into the recap. Let's jump into the small cap action. We are red today. We're down 361.04 to be exact. Gross profits. Now there'll be a little bit more we can add on to this. Maybe like $5 in terms of FINRA and SEC fees. Let's go to single screen here. There we go. Yeah, so that's the P&L on the day. Now let's look at how it all happened. AGFY. This one, we covered our position towards the end of the day here. Getting in for a couple of minutes. So just one share, right? I'm actually testing out a new strategy looking for this recovery bounce, right? This is going to be something that will be ongoing over the next few weeks, maybe the next few months. But I want to look at some stocks that are oversold and see if we can get that bounce, that relief bounce. Now, I want to do it earlier in the day. This one was a little bit more of an exception because of how this breaking news came out and this sold off hard. So it wasn't the best example to show and talk about. We'll talk about this more. So we'll leave this here for maybe tomorrow's recap. AVCT. Let's see. We're in on this one and we're down $18. Only a couple of trades. Just, initially trying to break of 2. It wasn't quite ready for that, aggressive volume spike. It happened a little bit later. Let's see. We had a nice move over 207, ripped to 220. This is the kind of candle I want to see. 13-cent breakout. Nice push, but ultimately, looking back at this was a pretty poor trade. This should have never happened. We should have just saved ourselves that $20. Losing 1 cent in there just wasn't worth it. Sometimes optimism can be an issue, right? And you're expecting volume to come into the stock in a specific area, and it doesn't. And ultimately, it's not worth the trade, right? It's better to just trade a stock that's already pushing good volume and that's coming up to this type of a level, right? So AVCT, we could have done better there. We tried the pullback here around 14. I believe we stopped out a little too early, and we had a push to 21. In fact, it wasn't a bad trade. We sold some, and then we sold the rest as it came back down. It wasn't a bad trade here, buying the low to pull back, selling a little higher. But we didn't get the new high of day levels right there that we wanted to see. FNHC. This was maybe the one we traded the most, and the one that I thought had the most potential as well. But just didn't get to see proper alignment in some of the areas I was buying. Not bad though, all in all, right? It came from a low of 90 cents, break of 1. I could have done well. I'm in at 99. I sold at 1. And I sold because the sellers that were showing at 99, I thought was the bulk of the sellers. As we broke 99, we hit 1 and I saw a whole nother depth of sellers. I'm like, okay, this could be a problem. I sold too soon. It ended up ripping. I missed the 4-cent breakout over the highs. That could have been nice. 5 cents, 6,000 shares is a pretty decent way to start the day, right? That would have been $300. But anyhow, so we missed out on that trade, and from there I kind of had a hard time with it, right? So let's see, we had at 933 we had a low of 1, so it pulled back to the level and then curled back higher, right? High of 110, pull back here to lows of 103. I bought this pullback and bought it a little too high. Bought it 06 thinking we bottomed out. It pulled back lower, and I wasn't willing to get back in again with the low of 02. Kind of hesitated a little too much in some of these areas, but I just felt like the stock was a little hard to read overall. Like, hey, where's the bottom going to be? Bottom of 4, bottom of 3, then bottom of 2. So it came down 1 cent at a time, and I expected more of like a 2-3 cent flush, level 2 pausing, holding, showing that we're buying up those shares, and then the curl back up. So ultimately, I didn't trade this one super well, and likewise with this pullback here. This entry in particular, I didn't like. I tried to buy high of day, essentially 1 minute candle to make a new high, but in this type of tight range stock, what are the odds that we'd really push right through high of day, getting in a little early right there, right? Getting in early and not early enough, because I'm in for break of 11, but I'm not in at the lows. So it's an in-between entry, and this 1 minute setup works well on stocks where we have range. Limited downside risk, high upside potential. Let's say, you know, we're at $4, $5, $10, and we have a high of, let's say, 513. Let's say we drop down to, like, you know, 495. First 1 minute candle to make the new high probably goes to like 525, 530, 625, 630. Because this price range and how tight we are and narrow we are, there's not as much range for this type of setup to make sense. $10 stock, you buy, you know, let's say 1011, you're probably selling at 1030, right? Unless the stock is just really, really, really having a hard time. So that was a problem. This is also another entry where we could have avoided. We got in a little too high. So these two entries were very similar. This and this right here, right? This one a little bit better, but still, you know, having to understand that, hey, we might not go. What are the odds that we go? If we're not in on the lows, it's not making sense for some stocks. Some stocks is just different. Other stocks will, once we have that range, it's not a problem. So what I did do here now was finally bought the lows, sold half above 110, so in at 5, selling a $1,000 gain, and unfortunately we sold the other half break even because it flushed down so quickly here. We had to, you know, really scramble to get out of there flat, and from there it sold off. Titanic, man. Had a hard time. If we look at the 5 minute, hardly a candle that was looking like good for a bounce opportunity. You know, we had the bottoming wick here, but even here it wasn't looking convincing. I think over here is probably where I would look, like, you know, for what I'm looking for with the relief bounce. I think over here is where I would have maybe considered it. We're seeing this ABCD. It's not a perfect double bottom by any means, right? But as we pull back right here, low of day is at 185, well, rather 85 cents, and we have a low of, in fact, did I see that right? No, low of 80, and we pulled back to a low of 82. So this wouldn't have been bad here, but the thing is that we made the high first, right? So we had this bullish candle. You kind of have to want to see some confirmation, right? This is a very nice candle here, pretty bullish, double bottom, and we curled up nicely. But, you know, this is where it's a little tricky. If I'm in here at 88, you know, my stop low of day at 88 cent stop. It's pretty big risk. You know, pretty big risk for a stock that's only going to go to 95. So on these relief bounces, we want to see a bigger move. And I think it's why I want to watch stocks, you know, kind of looking in at different strategies. I think I want to see stocks that are pulling back early in the day and are then curling up. You know, early pullbacks into the open, the first 15, 20, 30 minutes, right? You know, kind of like this. But, you know, we'll see some better chartings over time for some better examples. Now, INPX, this stock, you know, I thought I was going in for a very tight risk trade here. We had high of day, well, not high of day, but we're curling up on this push. We got a high of 768, and I was watching the pullback here. I'm like, okay, 768. We made a new high of 778, only a 10-cent breakout, and I think this is where maybe I could have done a better job adjusting and avoiding this trade. We only had a 10-cent breakout. I think I would have needed to see a breakout here of at least 20, 25 cents over VWAP, and then watch for the pullback. Because, you know, it's the usual pullback that I'll usually look for, but the pullback itself wasn't big enough, right? Or let's say there wasn't enough range from high of day. For a stock that's at $7.50, we only broke up by 10 cents. That in itself was just too much weakness. So here we go, big move. Can we see something like this? And then a reasonable pullback, you know, consolidation, and then move to the upside. So yeah, INPX. That's kind of what we needed. So this ultimately is a poor trade, I would say. Real time, sometimes you're thinking you're seeing something and you're not, right? Hindsight, it will be better always. But not the best trade right here. We lost $100 there pretty quickly too. We're in, you know, the second that we're in, it starts to sell off a little bit, but you know that happens sometimes. Last trade of the day, it's not showing up for whatever reason, but INPX, we took a trade, I believe here, watching for a potential double bottom, but it broke below my stop. I wanted to see us holding this area here, but it didn't quite happen. When I stopped out here, I'm like, man, you know what? I might have been out a little too soon because we crawled back up to high 34. I'm in at 17 over here. We crawled back to a high 34, but I think I did the right thing, which was getting out of there. You know, the volume profile wasn't the best. You know, we wanted to see it hold up on this bull flag and then make new highs, but you know, I think I was just too late. I came back from running some errands right here on this flag and missed the move. So missed this beautiful breakout, here, right? So I missed all these big green candles, came back a little too late, tried buying the dip over here, and it did not work. Tried buying the dip right here, didn't work. Sold, and it went lower, curled up, and then it got rejected again. So yeah, that was the day, guys. It wasn't a day that was like out of control or anything. We used some fairly big size. If we look through some of the orders on the other stock, you know, we used some decent size, 3,000 shares. We went up to 6,000 shares at least once. And yeah, we just didn't see much follow through. You know, we're in at 04, well, 05 and 07, coming out at 4, not good. Just not really getting to see the level of follow through. And the one decent trade here that we did take towards the end in at 5, we only took, and we should have definitely been in more aggressively here. I had the chance to add a 3 or 2. I didn't take it. Needed to be more aggressive right there. Minimum, we should have been in with 6,000 to 8,000 shares on this particular trade. 5 cents on 8,000 shares, 6,000 shares. You know, it's not too bad. That would have brought us back a little flat, slightly in the green. So it was good risk management, but you know, we could have still done a better job. And you know, from the side of the market, we want to see some more action. Can we see a little bit more follow through? Yeah, guys. So be sure to hit that thumbs up button if you've enjoyed the video. If you're a new viewer, consider subscribing. Guys, be sure to check out Momo Pro, right? Momo Pro, Mometic, for the hottest stocks. And in fact, right now RMED is moving up. RMED. Right, be sure to check out Momo Pro for all the hot stocks. You guys can use code Relentless for 25% off for 6 months. Be sure to check it out. Check out those links down below for the Instagram and Facebook pages. It's been Relentless Trader, and I am, of course, signing out.